Welcome to the Snowbirds Expat Radio Podcast, powered by the Snowbird US Day Tracker app. I'm your host, Gerry Scott, and my goal is to give you answers to your cross-border questions, to ease the stress of a cross-border move or extended trip, and to keep you up to date on all you need to know with cross-border rules and regulations. Now let's get on with the show. Well, welcome back to the Snowbirds Expat Radio Podcast. Today we're here with Heather from Heather, your tax Junction. Is that correct?
That is correct.
Okay, we got it right.
That is where I'm from. That is who I am.
Okay, and she's based in the province of Kelowna, which we like to say because Kelowna has this arrogance about them being their own province. But today we're going to be talking about once again. Kind of a carry forward from last week where we're talking about U.S. people working in Canada for U.S. companies or Canadians working for U.S. companies. So, Heather, before we get into these really technical questions that we had to research for years and going through every tax guide on the U.S. side and the Canadian side, tell me more about tax junctions and what you do and who your ideal client is and who you serve.
Well, we are just a small firm. There's just me and one other person, and we help not anyone, personal tax. So U.S. personal tax. We will do the Canadian side as well if we're also doing the U.S. side. So a lot of U.S. citizens that live in Canada have to file in both countries, and we'll help a handful of those. Sometimes we help people that just work in the U.S. Yeah, and we limit it. We try not to get involved with people with trusts or corporations or partnerships. We leave that to the bigger firms. And yeah, so lots of preparation, a little bit of advice here and there.
Now, do you find that, when we talk about Kelowna, and I shouldn't have called it a province, that was very cruel of me because it is a beautiful, beautiful place. Do you find a lot of expats, Canadians that had worked in the States for many years are moving back to Kelowna? Is it a hotbed for U.S. people?
There's always a handful every year. I don't even know if they all come to me. I don't know if that's a lot. I don't know if it used to be more or it could be less, but there's definitely people for sure that'll either used to be Canada, like they're Canadian, they used to live here and they're coming back. And there's sometimes people that never been Canadian. They just want to live here, so they move here and do the immigration side.
Well, we're putting in a big plug to increase the population of Kelowna because it really is a lakeside community. You're surrounded by beautiful weather. You've got the desert an hour and a half away up in Osoyoos, so it is a beautiful area if you love that lakeside community. Okay, let's jump into these questions here. So here's the first question I have for you: is when someone lives in Canada, works for a U.S. employer, what are some of the key factors you look at first before discussing retirement contributions, maybe if they're able to contribute to a 401k?
Yes, I don't often actually talk to someone before they start working for the U.S. employer. They've usually already done it by the time they find me. But one thing they should, it depends if it's a U.S. employer, like totally U.S. based, or if it's a Canadian employer that has a U.S. arm. If it's a Canadian employer with a U.S. arm, they could look into paying into CPP. There's a certificate of coverage where you can still pay into that up to 5 years as long as you're working ultimately for a Canadian employer, but you're in the U.S. If not, you will pay into U.S. Social Security. So that is something to think about. The key in all of this is just make sure you're actually on payroll for the country you're working in. So sometimes someone may it doesn't happen too much that way, but wants to go live down in the U.S. but still work for their Canadian employer because they're just working from a home office, and that is never advised. You want to work where you are, or you want the payroll to be where you're actually working.
Now, this is interesting because, I'm thinking of a family that you look after the accounting, we look after the wealth management for them. It really does come down to choice. If an American, like United States is not looking to disperse all these Americans into Canada, this is motivated by the individual person. hey, I want to live in a Soyuz. Therefore, how does this work? And that's where you get involved. Is that correct?
Yeah, sometimes before they move, that's ideal. But sometimes they just move and then they're like, oh, I guess I gotta figure out the taxes and try to contact someone. And sometimes it's a bit late to do some things when that happens. But yeah, the ones I don't like are the ones that move up here and think they can keep working for the U.S. employer from their home office and nobody will know the difference because that just opens up the U.S. employer to potential payroll issues in Canada. They'd be liable for all the payroll taxes if they don't do that. It makes their tax returns harder. Generally, I just won't take someone if that's what they're wanting to do. But
Well, when we talk about some of these larger employers,
if you do want to keep working for your U.S. employer while you move to Canada, that U.S. employer has to figure out Canadian payroll. They can either do it on their own or they can use a third party. There's companies out there just for helping that kind of thing.
okay. So here's an employee moves to Canada. They love Canada. They're Canadian citizens. They want to live in their Soyuz. And so it's just a matter of working out those details. Are they still able to contribute to the 401k, or is it an RSP that they contribute to? I think under these circumstances, and I guess I was told before, it comes down to the services that are being provided in what country. Is that correct?
Yeah, I mean, some of it's going to be who do you work for and how flexible can they be. Sometimes you're working for a big company and they're not going to do anything special for you. So you just have to figure out if what they're offering is going to benefit you or is it going to work out for tax purposes. But so, I do have I think I have one client that kept working for the U.S. employer because they just knew they wouldn't do anything differently and you just sort of make it work. But far as like a 401k contribution, it's one of the only things that Canada will recognize as well as the US. So if you are working for an employer that has a 401k and you want to do it, it's not the end of the world for Canadian tax purposes. It is subject to the same limitations as RSPs. So I did have, I think, one client who contributed to 401k last year because they commute and they work down in the US and come back, and they contributed a bit too much. So we didn't get the full deduction for it in Canada.
Okay.
But it's still,
What?
especially if there's some kind of matching, I mean, it's still free money from your employer. So it's probably a good idea.
Okay. And do you find that a lot of these folks that do move to Canada working for the U.S. company, do a lot of them plan on staying in Canada? Or do you think it's some of them without, and what happens if some of them actually head home? It's been 5-6 years here and they say, Canada is just as crazy as the U.S. We might as well go back. Are you seeing a lot of that? Do people move here and then come back? Are you seeing that?
There's definitely people that, I can think of one couple that moved more retirement, I think. And then actually probably two in the last little while that have moved here for maybe quality of life. I don't know. But then one of them moved back for sure for grandchildren. The other one, I'm not actually sure. They were kind of bored and they wanted more land. So maybe it was just cheaper in the US and so that's why they went back. But I have seen people go back, yeah, within I think both those were 3 or 4 years maybe.
We'll be right
Those are both retired people though.
We'll be right back.
Thinking about becoming a Canadian citizen? If you're a U.S. resident living in Canada on a work permit, permanent resident status, or planning your path to citizenship, you already know the rule: 1,095 days of physical presence in 5 years. Meet the Canada Physical Presence Tracker, a simple, reliable mobile app that helps you log your days in Canada, track multi-year stays, and monitor your progress towards citizenship right from your phone. No spreadsheets, no guesswork, just clear tracking so you can stay on track. Download Canada Physical Presence Tracker from the App Store or tap the link in the show description. And if becoming a Canadian citizen is part of your plan, you're already in the right place. Snowbirds Expat Radio features conversations with top immigration lawyers and cross-border experts to help you understand the rules before they become a problem. Build your path to citizenship with confidence.
The next question I have for you is when it comes to reporting and deductibility, you say sometimes people over-contribute to these plans where the employer is contributing. And like you say, it's not that big of a deal because it's still free money and it's still in a registered plan, but it does affect their tax returns. So how would you report that? It's just, here's a deduction. I'll let you answer the question.
Well, in the U.S., so the wages that they will be taxed on is net of the 401k. So it's similar to Canada, except that in Canada we put the income on and then we take the RSP deduction on a separate line, where in the US it's netted right on your W-2. So if you contributed, or you had $140,000 of income and $35,000 of 401k, then you have $105,000 of employment income taxable in the US. But in Canada, you're going to have $140,000 taxable, and then you can take your RSP off that. But if your RSP is only $30,000, then you're effectively going to be taxed in Canada $110,000, not the $105,000 that you are in the US. So you're going to just pay more Canadian tax. And if you still are here when the 401k comes out, you're going to pay tax on it again when it comes out. So ideally, if you can stop the 401k contribution at the same level as RSP, it's probably your best strategy.
Okay, yeah, so that was going to be my next question. So let's say, for example, this person is living in Canada, working for a U.S. Employer that doesn't provide a 401k, so they contribute to the RSPs. Is it easier? Are those RSP contributions going to be allowing to reduce when you have to report the U.S. income? So let's say, for example, in your case, I make $140,000. I put $30,000 in my RSP, so it gets me down to $110,000 in Canada. Is that $110,000 then reported in Canada? Is it all recognized, the RSP contribution?
It is all recognized in Canada, but in the U.S. you will be taxed on $140,000. They do not take RSPs as a deduction. However, the U.S. tax is usually a lot less than Canada. So say on that $140,000 you had $30,000 of U.S. tax. Well, maybe on the $110,000 you had $40,000 of Canadian tax. So you still have enough to cover the U.S. tax anyway.
Okay, so
as long as RSP contributions, as long as you're probably within the yearly limit, you're probably fine and it won't end up causing any U.S. tax. But if you're someone that's let your RSP room build up and all of a sudden you want to try to do 100,000 contribution in 1 year, and you're a U.S. citizen, you got to be careful because you might end up triggering U.S. tax because you won't have enough foreign tax credits to cover the thing. Or we use the foreign earned income exclusion, which is another way to reduce income for the U.S. purposes. But you just have to be a little careful if you're going to have too big. But in general, the not having the RSP deduction in the U.S. is not as big a deal as it sounds like it is because of the tax jurisdictions being so much different, right? In Canada, you're paying provincial tax and federal tax. In the U.S., you're only paying federal usually.
Now, I'm going to talk about some of the mistakes people are making, but before I get into that, I remember you and I were dealing with a situation, and I was driving in the Okanagan, and you called me up, and I believe that what we were trying to deal with was a certificate. I think a person had sold a home in the United States. There was taxes withheld, and I think there was an issue around the certificate. Do you see a lot of that? Because I'm assuming that you, on the Canadian side, people are going to come to you when they sell yours real estate and help you through the process. Do you remember that conversation we were having?
No, I don't remember. But selling U.S. real estate for sure as a non-resident of the U.S. can, there's definitely some hoops to jump through, and you want to make sure it's done right. You want to work with a lawyer or an escrow agent that knows what they're doing and that the paperwork gets done right. Because I have seen more than once, it's owned by two spouses, but all of a sudden all the withholdings on one spouse's slip, and then that can cause issues trying to get it back from the IRS someday, or the wrong ID number is on the slip, or there's no ID number on the slip. So, yeah, it's mostly right, and that stuff I don't necessarily help with, but if I can get to them in time just to make sure they work with someone that knows what they're doing, it's a good idea. I actually hardly do that kind of work anymore because the Canadian Passport Office changed their rules about how they'll certify passports, and they won't emboss them anymore, and the IRS won't accept certified passports that aren't embossed for an ITIN application. So I can't help with ITINs anymore, which means I can't really help with U.S. sales very often unless they already have an active ITIN. But yeah, they're sometimes messy. In fact, I had an email from a client that got a notice from California about her 2021 real estate sale this week. It's like they never end. Anyway.
So that was my biggest, when I talk about when someone who's working on the U.S. side, the Canadian side, and filing multiple tax. So you're going to file both the Canadian and the U.S. returns for clients, correct?
Yep.
Okay. So what are some of the problems that you run into? Because I have to think that your job is always about putting out fires and dealing with mistakes and people coming to you because they made a mess. So what are some of the common mistakes that people make?
Well, not filing in the U.S. for 5 or 10 or 30 years. And then they need to be caught up. And we do that a lot. I see a lot of people that get their returns prepared by someone else or themselves, and they get a foreign tax credit audit because it's very, very common in Canada. If you have foreign tax credits on your return, I would say more than half of them get reviewed. I don't know, maybe it's not more than half, but it's a lot. And if you don't respond to it, the CRA is just gonna adjust your return and make you owe more tax. So I have a new client, and all of a sudden that's what's happening with his last year return. We don't know exactly what happened, but either he never saw it, never responded, or his accountant saw it, never responded, or they responded with the wrong documents. So I see a lot of that. What else? You want to know what? Oh, actually, I think it's that mutual client of ours. We'll see if this one goes through, but she was working for the same employer, but on a W-2 for the first bit of the year, and then on a T4 for the second bit of the year. But then there was, but there was income reported on both that was the same income, and then there's income reported on both that wasn't on the other. And then both of them had RSUs, which are tax dependent on, like, where their source depends on where you're working over the time it was vesting. Anyway, completely ugly to try to figure out. And of course, CRA now is questioning all of it, and I'm trying to explain it to them, and I'm hoping for the best that I explained it right, but I'm not that confident. I don't really know what the solution to that would have been. Maybe just try to switch over payrolls January 1st instead of later in the year. That would have been easier.
You know, that's the stress. I mean, if this stuff is sitting with an accountant, and it's when you're talking about the W-2 and then you're talking about the T4, if it's confusing for an accountant, you could just imagine how stressful it must be for clients out there. And, you know, this is what we stress all the time. And the reason why we put this podcast and we put the apps together is just making sure that individuals can connect with the right professionals. And it's got to be stressful for people out there. And that, you know, and as I know you're talking about, I should reach out and to see how they're doing, because that same family had a chance to meet us in Maui here, and we went to a little sports bar called the Ale House, and we were watching the Kansas City Chiefs play, and he was this person was a big fan of the Kansas City Chiefs, so we had a great time with him. But
Yeah,
other
that's
than that, I know this is
wait, I got another good one.
okay. Good.
This is what people do. I was just trying to think of. I had this one new client, but I actually didn't take them. So he's moved here from California. And his family's up here. I think they said they bought a house. And he's still working in California, so I think was traveling back to work there. And then there was RSUs, whatever. And then he said, my situation's very straightforward. Just wondering if you can. And that is the problem, is he thinks, I just moved to Canada. My family's there. I work here. It's straightforward. It is like not. Soon as it's cross-border, it doesn't even really matter if you're working cross-border, but if you're working cross-border, that just adds a whole other layer. Like if you are moving to another country, it is not straightforward. Bottom line, it is always more complicated, and people just don't get that, I don't think, sometimes. So either you think people are stressed, some people aren't stressed enough because they don't actually get that
Well,
what you're doing is not simple, right?
Along that lines, we've just we've completed this this book, which is called it's called the Best of the Snowbirds Expat Radio Podcast, and based on all our conversations with clients and podcast guests that know what they're talking about, we put together a book, and it's very interesting because every time it says you may move, but immigration doesn't move with you, or you may move, but your tax situation doesn't unless you're prepared, or you may move and your finances don't move with you as well, because there's so much complexity around here. So that book, we hope, will be ready. It's with the publishers right now in Los Angeles, and we hope that book will be available, if not January, February of 2026. So I'll be excited to share that with everybody. And I don't name any accountants in it, but all this information has come from people like Heather and the other individuals that have been on our podcast. So stay tuned, and we call it the we don't want to call it a survival guide, but we will call it the it's similar. It's just giving you enough information to realize that you're going to have to talk to Heather. We're not substituting the book and all the knowledge in the book to replace Heather. We're showing the importance of dealing with Heather even more. So Heather, other than that, I know this is we're getting close to Christmas. I think we're 9 days away. Oh, I'm sorry, 8 days away from Christmas. And I know you're going to be
I'm ready.
Yeah.
I bought my last gift yesterday.
Oh, well, good.
I haven't wrapped or anything. I'm going to wrap still.
Well, I'm a cheater. I go through Amazon for everything. So I always say the last gift gets delivered on. But anyhow, I truly appreciate what you do for us, and you've always been there. So I know Heather is very busy. She doesn't have the ability to take on everybody. But I know when we have referred people to Heather, she's been very accommodating. If she can help, she will definitely do her best to fit her into her schedule, which includes raising teenagers and looking after her husband and looking after her Bermudoodle that we've talked about many times. So once again, I appreciate your time, and have a wonderful Christmas. And we hope to see you this summer. Thank you again for listening to the Snowbird Expat Radio Podcast. The best way you can support the podcast is to forward the episode to a friend, and please don't hesitate to like, subscribe, or leave a comment. Now, before you go, let me leave you with one of my favorite quotes. Be kind to all, the world is small.